Welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit your highly appreciated real estate, save a failed 1031 exchange, sell cryptocurrency, primary homes, really any asset that's subject to capital gains tax, so you can create and preserve more wealth. Hey, I'm your host, Brett Swarts. Each episode, I'm joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income streams achievable. Hey, I'm excited about our next guest. We're going to be talking about all things of how to transform your life through real estate. In fact, this next guest has been an active real estate since 2002, and he founded the DeRosa Group in 2006. And the vision is to do just that, help you to get transformational life through real estate, and is focused on maximizing investor returns while providing high quality spaces for sale and for lease. And they are a per-profit company committed to making money while making a difference. By the way, we're also streaming on expertcresecrets.com. So if you're finding us there, we do like to bring on guests that kind of cross over to both podcasts, especially commercial real estate experts, such as our next guest. Please welcome to the show with me, Matt Faircloth. Hey, Matt, how you doing?
I'm awesome, Brett. Good to be with you, man. Thanks for having me.
Excellent. Yeah, I like the dance this morning. I like the energy. Excited to get going for our
Friday.
listeners.
It's my happy Friday dance, right?
It's Friday. We're recording in mid-August, and let's talk real estate. Let's talk marketplace. Let's talk your story, though, first. So for our listeners get to know you for the first time, would you give us a little bit more about your story and your current focus?
Sure, man. Thank you. And an honor to be here. Love the model of your show. Looking forward to getting into some conversations. So with that, my name is Matt Faircloth. My company is called the DeRosa Group, and we are a real estate company dedicated to transforming lives through real estate. What that means is we provide awesome housing for people that they can say they're proud to live in. We provide great investments for people that want to diversify outside of Wall Street. And we provide exciting work environments for those that work at properties that we own. And we also support operators that are doing the same thing through our initiatives there. So been investing full time for 15 years, have been involved in a lot of different real estate ventures, from fix and flips and single family homes and tax liens and all kinds of other fun stuff. Our primary focus is multifamily, but we also get involved in some other alternative assets too. We also own an office building that is cut up into like a Regis style office complex and that. But my primary passion is providing amazing above bar housing for people. So that's us.
Amazing, man. And where are you located?
I currently live in Pennsylvania. My office, we have an office the office building I mentioned is in downtown Trenton. And we have assets in North Carolina, Kentucky, Virginia. And no, not Virginia yet. We're hopefully have a deal in Virginia, but North Carolina, Kentucky, and Pennsylvania, New Jersey.
Cool. Amazing, Matt. And I want to take one other step back too, right? I want to go back to maybe your university days, your high school days, when you were younger, perhaps. And, I believe we've all been given certain gifts in this life. And these gifts, I believe, have been given to us to be a blessing and help to others. Some people call them superpowers. Some people call them strengths. I think they're God-given gifts. And I think they've been given to us to be a blessing to others. So I'm curious, what are those one or two gifts that you believe you've been given? And how does that help how you help and bless people today?
Sure. I would use the same language myself. But the way that I would say it is that I'm blessed with the ability to explain complex things in a simple fashion. In another life, Brett, I wanted to be a teacher because I know I can do that. I can explain things that I'm passionate about to people and help them understand those complex things. Those things are real estate investments for me. But I can also explain to my 7-year-old how an automobile works in ways that he'll get it. I think that's one of my God-given talents. I'm also good at for things that I am excited about, I'm good at conveying that passion to others. So if I'm excited about it, I'll likely get you excited about it. So those are two things that I bring to the table.
Love it. Those are great gifts. Making complex simple, being a teacher at heart, and then helping to inspire or get people excited about things that you're passionate about. Is that a fair summary?
Yes.
Fantastic. Now let's jump right into the number one secret of transforming lives through real estate. First of all, how cool is that you have a a trademark. I believe that's the name for it, right? For this transforming lives through real estate. Touch on that, and then second, what's the number one secret to doing just that?
Yeah. Well, I mean, I think that the concept of trademarking something is that, like, if you come up with a concept that's so special to your brand and so special to what it is you're creating, it's good to protect it, because other people might say, "Hey, that's a good idea. I'm going to use that for my company too." But if you want your company to be known for a phrase or for a brand or for a name or for a logo or whatever it is, it's just good to protect it legally, so that other people can't run out there and put their "Yeah, that's mine too. I'll put my stamp on it as well." And so the concept of transforming lives through real estate is something that we came up with years ago, upwards of 10 years ago, and we were certainly the first ones to use it. So it makes sense to just protect it in that, because it's something that I want to have our company known for. It is our vision longer term, Brett, to start supporting not-for-profit initiatives and give back and helping people, having conscious-based investing and things like that I want transforming lives to scale beyond just buying apartment buildings and doing good things doing good things with money in real estate, but also, doing good in the world with the returns that we make as a company, not that I make for investors, but with the returns that I make to taking those things and pushing them through other real estate benefits and things like that. So
Very cool.
I think we can transform people's lives through the profit that we make too. So
Love it. No, I think it's fantastic, and I think it's wise to not only have a vision statement, set something that's a slogan, that's a brand, all of those things, and then to try to actually go do that, right? What you're doing right now. So let's dive right into that. So what's the biggest deal that you're finding, or biggest opportunity, or biggest challenge, however you want to take this, right now for the deals that you're looking at, or even the investments you're making? You mentioned hard money lending. So walk us through kind of what your 2021 strategy is, and how it's all coming to fruition here.
Okay, I'll comment on a few things, right? So we're launching a blended fund. And that blended fund is going to invest in hard money loans and distressed mortgage assets and operators that we believe in that want to take their business to the next level. That's what our fund is going to get itself into. It's new. So I can't talk a lot about what 2020 has been like for that fund, because the fund just got launched, believe it or not, Brett, 2 weeks ago. But what I will comment on is our experience in finding multifamily in today's markets, because that's been a journey. It's been the secret's out. Multifamily is a good place to invest. And so there's a lot of new operators and people that want to make a name for themselves in the space, or existing seasoned operators that are looking to expand and grow because new investment capital has discovered that this is a great place to go, to park money, but also to make great tax leverages, as your company brands as well, to make tax leverages in real estate investments. So the multifamily space has gotten a little more competitive. We have underwritten, happy to say, Brett, 150 deals this year. And we put one under contract and closed on one, and we've made best and final on a few. Didn't quite make it. We've got a few that I think we're about to hit one in the next week or so. But I think that our strategy has been, Brett, to look at more deals, to do some off the market solicitations for people that are looking to sell that aren't on the market right now, and also consider expanding 1 to 2 markets that we're in the U.S. So that's been how we're mitigating how competitive multifamily investing has been these days.
It's wild. Yeah, I couldn't agree with you more.
Amen.
And it's especially, I'm here in California, right? And it's just like these cap rates. I'm selling a deal right now. It's going to be $175,000 per unit to a 1031 exchange buyer, representing my client, who's going to be doing a deferred sales trust. And it's going to be a record-breaking price for the units. Now, the units have substantial amount of loss to lease, the ability to just, if, there's rent control in place now, and a lot of people aren't moving. If they move out, which we've
Capital
been blessed.
eye on that if, right?
Two tenants have moved. Check it out. 2 tenants have moved out in the past 3 months alone, and that's kind of when the listing we started 3 months ago. And so we were on this pro forma, right? And the idea was, well, we want it 2.6, but the market was like 2.3 to 2.4 ish. But it was counting on the ability to move out, but we didn't know it could be a year or 2 or 3. But all of a sudden, we got 2 to move out. Boom, price we went full above asking price at 2.6 and in contract now. But the point of all that is, it's hyper competitive, right? Because multifamily is is the basis of foundational living, right? Of housing. And you're right. It's also financeable, very financeable. And there's a lot of money chasing few and fewer deals, especially those that are value add. So let's dive into that one deal that you found. A, how did you find it? B, what is the deal? I get, of course, too, right? Kind of give us the specs and what's the outcome on the pro forma.
Yeah. So we'll talk. We have one that we're chasing. That's a big deal. 300 units in a part of Virginia that's really exciting. And I'm hoping we land that one. But I'll talk about the deal we just closed, which was 2 weeks ago, which is 152 in Lexington, Kentucky. And it's okay. It was a off the market deal, owned, believe it or not, Brett, by our property manager. And that's a lesson, like not put a pin, but just put a little lesson in that one, that if you tell brokers you want to buy, they get that. They understand. They know that's why you're in the market. They know that's their job, is to sell real estate for people, right? But also tell other people you want to buy. So we told our property manager we were looking to buy, and we tell our lawyers and our title companies and our mortgage brokers that we want to buy, that we're aggressive, we want to get in. And this property manager turned over a lead for us to say, hey, we brought this deal 4 years ago. We've kind of brought it as far as we want to. We're looking to get out of ownership, actually. We want to get into just managing, and they want to build and manage. That's it. They want to build apartment buildings and manage them for other people. The end. They don't want to own long-term assets anymore. They want to build and sell and manage. So their business model was changing, because nothing's stagnant, is it, right? Things change, and business plans change, and desires change, and goals change, and things have a beginning, middle, and an end. And this property manager was getting to an end of their ownership period on this property, and it just so happened to work. They were thinking about listing it, and they said, well, we won't list it if you guys will let us keep managing it. And they're an A+ operator. So absolutely, yes, manage my apartment building, because it's what they already managed a few of them for us already. And the other thing is that they were like, well, we would list it for this, but if you guys will buy it for this, it'll save us that listing commission. It'll save us the hassle of having put it on the market. Maybe you have to go back and forth with buyers and sell it with buyers and this and that. So, and we'd like to do you guys a favor and sell it to you guys for a good hassle-free number. Everything worked. The numbers added up. Off we go.
Awesome. So telling people you want to buy, having a good relationship with property management.
Yes.
They sold you their actual deal. Fantastic. So what was the deal? Like, how many units? What was cap rate, IRR,
Yep.
Cash on cash? Kind of give us, and what's the business plan to make it a home run?
Yep. 152 units, Lexington, Kentucky. It's called the Lexington Villas. We call it Lex Villas for short. It is a B-class asset. It was built a while ago. It was a 1970s vintage, but it had a major facelift, major reno by the property manager. The rents are solid. Because we're buying from an A-class operator, a lot of deals that I've done, Brett, have been with managed by column like B level or C level, even property management companies. Where the big thing you got to do is I got to get that property manager out of here, because they're just wrapping this place around a tree, and we need to get a new PM in to run this property. This was not the case in this asset. This asset was already being run very well, and believe it or not, Brett, they had already implemented, at our request. Once we put it under contract, we said, we want you guys to start doing rent increases as leases renew, to do a mild reno and rent increases as we go towards closing. They agreed to do that. And so as they got closer to closing, they started doing these rent increases and doing these renovations on their own dime at our request, because we were going to be their client very soon. And they were able to prove our business model before we closed. How great is that? So cash on cash on the deal, will be in the mid-single digits first year, 6, 7, 8%, somewhere in there. We offer an interesting model, Brett, where we'll do a typical syndication investor level split, where they get 6% pref on their money plus 70% of the upside, 70% of profit above that. That's one model you can do, but that's a 10-year hold. You don't want to hold for that long. It's okay. We also have another share class that we offer investors, where they can make 9% on their money paid monthly. So a 9% coupon, no upside. That's okay, because we're going to refinance the property in a couple of years, and we're going to take them out completely. So it's a 2-year cycle, at 9%. So you can either go short at 9 even, no upside, but hey, that's the exchange you're making in exchange for a short investment cycle. Or you want to go long with us and join us for the long marathon. You can make a 15% rate of return on your money, but
Cool.
you're going to be in for a while. You're going to have a return to capital at refi, but you're going to be running the marathon. It's like a sprint investment or a marathon
Yeah,
investment.
got
Which one do you
it.
want?
Perfect. Awesome. Amazing. So, right, 6% pref, 70%, 70% upside, 10-year hold as long as you're with 10 years versus 9% pref, zero upside, but a little bit shorter term with the refi. And by the way, you can learn more about Matt Faircloth at drosagroup.com. That's drosagroup.com. That's DEROSA group.com for those who are listening on iTunes. So, okay, excellent, Matt. So I like it. I like it. I like the 152 units. I like that it was a deal that you had someone that you trusted and knew, someone who's going to be managing it, right? Someone you could hold accountable, right? Even after the close of escrow, right? For these units, someone that's going to be willing to put some value add in before and kind of prove that we can get some higher rents. All of those are really good signs and good indicators for a solid deal. So love that. Okay, great. And then you're going and you're chasing the 300 unit. You want to touch on that one briefly as well?
Yeah, I can't say a whole lot on that one, Brett, because we're not under contract on it. But I can tell you, it's in a top tier market of the I'll call it the Mid Atlantic region. Probably like in a top 5 city that's facing tremendous growth. And it's what I like. I like 2 things, Brett. I like deals that are either off the market, sold by my property manager and all that. That's just a slam dunk. The other thing I like is deals that have a little conceptual hair on them, if you will, right? Not down the middle of the fairway opportunities, because if you throw if it's a plain vanilla bread and butter deal down the middle, everybody and their mama is going to be in on this, right? So I like deals that have something a little funky to it, and this deal has 2 things that are funky. It's the ownership arrangement's funky because it's a condo. It's a bunch of condos, and it's a loan assumption. So you cannot go get your own debt on the property. You got to assume the debt in that, but the debt's favorable, right?
Is it a yield maintenance deal or is it a big prepay? Is that why you're doing the loan assumption?
Yeah. Well, I mean, it's one of those. That's the double-edged sword, right? With doing deals with agencies, with the federal agency like Fannie Mae, Freddie Mac, right?
Yeah.
Is they offer phenomenal terms, non-recourse, interest only, rate locked for a long period of time. They kind of stay out of your hair. They're the gold standard, aside from like going to HUD locked for 30 years. They're the gold standard for real estate financing. But if you want to sell shorter than your cycle on the loan, either you better have somebody to inherit that loan for you, or you better be waiting to just pay out the nose in fees. And it's some people call it prepayment penalties, but as you said, they like to call it yield maintenance and things like that when it's really defeasement or whatever, when it's really, really high.
It's a mess. What's the interest rate on the loan?
It's in the I think it's in the high 3s. So it's okay. It's favorable. It's okay. Right?
When does it adjust?
Like 12 years.
Okay. And was it 30-year AM?
30-year AM, IO for 4 years.
Okay.
So I get IO for 4 more years, so I can enjoy cash flow, do some more stabilization, build it back up.
Sounds like a decent loan. I mean, I know rates have dropped into the low 3s, but to get the IO for 4 years and it's not going to adjust for 12. Most of the 3s I'm seeing are fixed for 5, 30-year AM, and then it's adjusting. And so
it was secured a while ago. It was secured a couple of years ago. But
cool.
the one caveat, you got to expect this because they're not giving the property away. They're the equity that we'll have to put in is well above 25%. And that's the owner's profit, right? That's the owner's upside is
prepayment penalty too. I mean, I'm sorry, assumption. It's a 1% assumption cost.
Normally, yeah.
Okay, yeah. Okay, cool.
No,
that's good.
It's a big equity raise.
If now, our listeners, go ahead, Matt. Yeah.
Well, it's a lot of equity to come in. Now we're trying to figure out how we can drop in something called a supplemental, which in layman's terms, that just means second mortgage, to drop in a supplemental on the property so we can.
Well, they allow that. I've seen few and fewer banks allowing seconds behind the first. What are they going to do this supplemental themselves?
Yeah, the dust lender, the servicer would allow for like the agencies will allow for supplementals behind these mortgages, especially if it's an agency. The agencies understand that, okay, if I can't let you pay off the mortgage and you've added a bunch of value, under certain circumstances, they'll let you come in.
Yeah,
And
especially with a 300 unit deal, and you can get some pretty solid numbers, and occupancy is pretty high. The larger the deal, the stronger the marketplace, the more likely they are to do those things. So that is fantastic, Mac. So we're going to shift. Any last thoughts on that? Are you good?
no, good to go. Thank you.
All right, so we're gonna shift a little bit. So part of our niche focus is capital gains tax deferral, right? And helping people make sense when they go to sell these highly appreciated multifamily GP positions, cryptocurrency, primary homes, or even like trying to raise capital for future deals. So I'm curious, for your experience, Matt, what's been the biggest frustration when it comes to capital gains tax deferral and/or the 1031 exchange over your career?
It's interesting. And I'm grateful we're having this conversation because I get this happens regularly, right? Two frustrations. I'll go through them, right? Because I do a lot of what I do in my company is dealing with investors, new people that want to place capital somewhere, that want an alternative to Wall Street, that want to consider multifamily investing, whatever it may be. I talked to a guy this week, Brett, that said, I've got a property I'm selling in Florida. He's blessed. He's selling it for a reasonable profit, wants to put it somewhere, right? Wants to put the proceeds somewhere. And he said, can I 1031 into one of your syndications? And I said, you can. I know how to do it through something called a tenant in common, a TIC. And that, but the paperwork's about that thick. It's going to be a pain in my butt. It's going to be a pain in your butt. You're not going to be happy. I'm not going to be happy, but we'll do it. If you can bring, a lot to the table. So those are the typical conversations I have. And a lot of times, Brett, what I'll do is I'll try and defer them away from the 1031 altogether to say, how about you just sell it and just take the money and, you bite the bullet, if you will. And I'm going to be doing a cost seg anyway. And so you're going to have a capital gain, and my cost seg is going to show a capital loss. And so we blend those two together, and I can wash out maybe not all of, but a good portion of your gain on the deal. So it's not the best, but it's been good enough, right? There's good, better, and best, right? So it's been maybe in the good range on what I can offer. That's frustration number one. Frustration number two is people don't want their money back, Brett. When you go and sell these properties, which we do, and we also refinance or whatever, they kind of get mad at you. It's like, well, great, you just made me this phenomenal return. We're selling a property in North Carolina. We're producing a 2x equity multiple, double their money, Brett, in 3 years, right? 30%, look at me, look what I won for you. But they're like, you just made me a problem. That's what the investors are like. They're saying, listen, this is great, but you just made me a problem. Thanks for the tax bill, Matt. Right. And so we have to find something else to put them into so that the whole thing, cost seg, can wash out the gain. So that's been the biggest frustration, is the clunkiness in finding new assets for investors that are coming off of what we're involved in, or that want to come in, that want to get in through unlocking equity they have in real estate that they have, and don't want to do it through a refinance. They want to sell what they have and upgrade and do a deal that we have going on. That's my real frustration, my friend. And that's why I'm glad we're talking.
Thank you, Matt. Yeah, and let me unpack that a little bit for our listeners too, and kind of just kind of make sure we're on the same page. And I think we are. Which, by the way, cost segregation is amazing, right? Especially if you have a brand new depreciation schedule. So that's what Matt's talking about. He's buying a brand new deal without 1031ing typically, right? And now that gives you a brand new depreciation schedule. So if you invest new money into that and your old depreciation schedule doesn't travel via the 1031, then guess what? You can get some more of that cost seg. Cost seg is just going to be accelerating that depreciation. On multifamily is typically 27 and a half years if you're going to take it straight line. But you can go in and do a study, and that study can constrain those components, or can break out the components and reduce the time, and you can take it all in like a year or two, right? Especially with this thing called bonus depreciation, which is pretty amazing. So yes, if you can cost seg and you can find a deal, I love that strategy. The key is finding the deal that makes sense, right? And having enough deals that make sense, and you're not letting the tax tail wag the investment dog, right? And then
square peg into a round hole, right?
Yeah. So it's like on a Rubik's Cube, right? And you're holding this cube and it has different colors on all the sides, and we got to line up this and this and this. And if we can get it just right, amazing. But if you run out of time or you run out of space, this is where the Deferred Sales Trust we absolutely love, because the old schedule doesn't travel. In other words, you can sell, put in the Deferred Sales Trust, turn around and invest it if you're an active owner get a brand new depreciation schedule without using the 1031 and not having to have those like kind requirements. And it's seamless to go into deals with you because it's just a trust. It's not a 1031. So that's a cool way to make that work as well. But really what we're talking about here is what's called tax flow versus cash flow. And so I like how you touched on that. Investors don't want their money back. I mean, they want cash flow. But all of a sudden, if you give them all of the principal back, guess what just happened? They're paying tax, or they're having to figure something out. And so as basically the economic tides change, and they're changing fast, and Biden has some serious proposals, right, that are literally wealth transfer, explosions for the wealthy in America, especially for real estate owners, right? Talking about taking away the stepped up basis, talking about taking away or limiting the 1031 exchange, talking about doubling the federal capital gains tax rate from 20 to 40%, right? Which in real estate, typically it's 30 to 50%, depending on the state you live in, and the depreciation recapture. But if he doubles that, it's going to go 50 to 70, right? So on the federal side, because it goes 20 to 40. So we'll see if those things pass. But just realize we're no longer in a cash flow game. That's important. That's just one leg of this stool. The other is tax flow. You got to make sure you got a dream team who's helping you to move this Rubik's Cube to just the right order at just the right time so that you don't have your wealth wiped out. By the way, you can learn more about the Deferred Sales Trust at capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. We've closed 7 of these deals in the past 40 days alone. We'll close another 7 in the next 40. We just closed a $5 million cryptocurrency case. They bought it for Ethereum for about $100,000. They're selling it for about $5,000. And guess what they're going to do? They're going to invest it tax deferred into multifamily investment properties, get that depreciation. Pretty cool. That being said, Matt, are you ready for the lightning round?
Hey man, you're taking me to school right now, and I want to talk to you offline about this whole thing because this is a conversation I've been looking forward to having, and I think that things like the DST don't take this the wrong way. It's the best kept secret out there. That it's not leveraged enough, and it's funny because Brett, we've been beat on bids by organizations that came in with the DST. Because the return profile is a little bit different. As you said, they're not investing for cash flow. They're investing because they want that asset that can have depreciation and that can continue the cycle going and everything like that. So interested in learning more. And I think that
also let me clarify real fast. The Deferred Sales Trust is not a Delaware statutory trust. So a Delaware statutory trust, and what you're referring to is these big groups that overpay for properties just to be able to have people to be able to 1031 into those Delawares, right? Especially if they have what's called mortgage over basis challenges. And they're really huge groups and they have huge fees, right? I've done some Delaware statutory trusts. They do have their place, but that's just another form of a 1031 exchange. I call it the Hollywood video to the Blockbuster. Right? Blockbuster is a traditional 1031. Delaware is just a Hollywood video down the street. Again, they have their place, but when highly appreciated marketplaces, they're not great because we're selling high and buying higher. Now, the Deferred Sales Trust is IRC 453. It's an installment sale. It's a completely different part of the tax code, but we have all kinds of flexibility. We have no timing restrictions, okay? It is a little more complex because people haven't heard about it before, right? And so, but yeah, you can learn more about that at the capitalgainstaxsolutions.com. Also go to YouTube. I have a whole thing called Delaware versus Deferred Sales Trust. Any thoughts, Matt?
No, I love it. I'd love to talk more. Can you how do we get I don't know if I think it'd be awesome to get the YouTube. I don't know if I'd love to to get the YouTube link to myself or whatever it is.
Yeah, just search Capital Gains Tax Solutions. You search that, and then you can search my channel. Cool. Channel pops up on YouTube, and then just search Delaware Statutory Trust versus Deferred Sales Trust. I call it the battle of the DSTs, right? And by the way, any Delaware people out there, I would love to have you on the show to have the battle, have the debate, right? Because it is a cool debate. But by the way, we just did a deal last week, a partial Delaware statutory trust and a partial deferred sales trust. So it's never just one size fits all. Sometimes it's a mixture between a 1031, a Delaware, and a deferred sales trust, right? Imagine that, multiple tools to solve complex problems, right? This is what we do every single day at Capital Gains Tax Solutions. So enough of that commercial. Thank you so much, Matt. Are you ready for the lightning round?
Yeah, man, I'm ready for the lightning round, and I can't wait to hear more about this. And I think that the vehicles you're talking about here are going to be the new standards as the world changes.
We call it the Netflix versus the Blockbuster, right? Yeah, so it's Netflix way of doing things. So.
Yeah, man. Let's do it. Let's lightning round it. Let's land some lightning bolts.
Okay, here we go. So coming fast here. So if you could go back to your 25-year-old self, Matt, what's the one golden nugget you'd make sure to tell yourself to do?
25-year-old self, I would tell myself that my physical health is more important than I think it is. Because I've really gotten into taking care of my physical body the last couple of years. In my 20s, I was like, yeah, I'll live forever. In your 20s, you kind of think you're bulletproof, right, Brett? And so I thought I was more invincible, and realized how important it is to take care of my body in the last, say 4 to 5, and that. So I probably would tell myself, hey, why don't you get to the
Yep.
gym?
Love that.
Get to the gym and eat a little healthier.
Yeah, fatigue makes cowards of us all, right? And if you haven't read the TB12 Tom Brady's book yet, and read the book. It changed my mind. I grew up as an athlete, playing college basketball on scholarship, playing football all my life. And I read that book. I'm going, oh my gosh, I'm just learning about fitness and health. Like, read TB12. Okay, second question. Number one book you've recommended or gifted the most in the last 12 months?
Let's see. Number one book I've gifted or recommended in the last 12 months. Recently, I'm recommending a lot of, just keep talking about health, of Tim Ferriss's The 4-Hour Body. Came out a while ago, but it is a phenomenal manual on human health.
Beautiful. I'm going to check that out.
Yeah.
I love Tim Ferriss. Third question. Biggest obstacle facing multifamily investors or syndicators or buyers?
Finding deals that make sense, not forcing a square peg into a round hole, and also syndicators that are out there on the market that are trying to get deals done just so they can get a fee. That syndicators that are in this thing for fees versus in this thing for long-term equity, building investor wealth, that are willing to outbid me or us on deals just so they can get their acquisition fee.
Yep, that's true.
Yeah.
Next question. What are you most curious about right now?
I'm curious about where I think that the U.S. is, or just the world anyway, is in like a precipice of like, not sure where things are going to go. So I sure do wish, Brett, I had a crystal ball to see where the next 5 years are going to go from an economy, from a global prosperity standpoint, from a global unity standpoint. And I feel like we're kind of at that fork in the road that we could go down the awesome lane or we could go down the uh-oh lane, right? And so I'd like to see the world go down to Awesome Town and become more prosperous and become more blessed and more harmony and more unified. And I think that there's strong possibility in going there. But there's also a lot of strife and a lot of divisiveness and a lot of us and them going on in our world too. And I sure hope we don't go down that road, but who's to say? Because I see both roads as very clear on how we get there. So
amazing. Last question, Matt. After all your success, helping all the people that you help on a mission to transform lives through real estate, how do you stay centered in your values, and how do you stay encouraged to charge forward to reach for new heights?
I take time to review my values on a regular basis. My spouse and I are on the same page, Brett. Like that is my value foundation, is my marriage. And my wife and I, still, go to church almost every Sunday, sometimes online. That's okay. Zoom church, not just because of COVID, but because it's convenient. But we do that regularly with our kids and everything like that. And so our family is the source of our values, and that's how I stay centered in it. My wife and I do spiritual readings on a regular basis, and I tend to put it around me and not just put it as this thing over here. Yeah, I believe that. I believe it and also consume it regularly.
Amazing, Matt. Hey, I want to thank you for being on the show. I want to remind the listeners that they can find you at drosergroup.com. That's drosergroup.com. I want to encourage you to keep using the gifts and talents you've been given of making the complex simple, being a teacher at heart. And I think you said the third one was... I forget, but those are the main ones that I remember right now.
Oh,
so
good,
keep
man.
using at least those two, and that other one you mentioned as well. And again, go to drosergroup.com to learn more about Matt. Matt, I'll be in New York in about a month, and as I fly over Pennsylvania or close to it, I'll wave. You know what I mean? I don't get to that side of the Northeast too often, but I'm hoping the weather is really good. I heard October is pretty solid in that area. So
New York in October will be spectacular. I hope you enjoy it. I'm sure you'll enjoy it. You'll have just the perfect weather, not too hot, not too cold.
Yeah.
A little chilly at night, but night's chilly, not cold. And maybe you'll catch the leaves change too. And if you get that, that'll be a blessing too. So.
Perfect. Well, thanks, Matt, for being on the show. And also want to thank our listeners for listening to that episode of the Capital Gains Tax Solutions podcast. Hey, we covered a lot today. Some complex stuff. We dived into some loan stuff. We dived into some commercial real estate stuff, some tax stuff. right? If we can help you at all, just go to capitalgainstaxsolutions.com, especially if you have a deal that's worth at least $1 million of net proceeds and at least $1 million gain. We give free consultations and we walk you through the different options: opportunity zones, 1031 exchanges, Delaware statutory trust, of course, the deferred sales trust, which we believe is the Netflix to the old Blockbuster way of doing things, especially right now. But we want to help you get clarity on all of those options so you can create and preserve more wealth or help your clients do the same. So go to capitalgainstaxsolutions.com for that. Please rate, review, subscribe. Please share this with somebody. Please tag somebody. We so appreciate you out there, and we look forward to talking to you.